Hello and welcome to Sectors Up Close. I'm Peter Devlin. Today we're talking US banking stocks with Tyler Ellegard, portfolio manager at Gradient Investments. Big bank stocks have mostly moved in tandem with the wider market this year. The S&P 500 Banks Index is up about 20% as concerns vanished about a hard landing for the economy. America's biggest bank, JPMorgan Chase, reports on Friday, alongside number 3 Wells Fargo, Bank of America and Citigroup following next week. Analysts will be paying close attention to resurgent investment banking income, as well as the impact of Fed rate cuts on net interest income. So what should investors be on the lookout for? Let's ask Gradient Investments Tyler Ellegard. So welcome, Tyler. So just starting off with the impact of falling rates. JP Morgan's warned that the market in September not to be overly optimistic. So what do you think that the impact of rate cuts will be?
What a lot of these banks have been able to do is as these interest rates have gone up with the Federal Reserve raising interest rates over the last 2 years, they've allowed their net interest income to grow with the rising rates. But what they haven't had to do is raise their deposit rates. So it's allowed their margin on what they're earning to be at record highs over the last, call it 10, 15 years. But now with the concern of the Federal Reserve cutting additionally 2 times this year on top of what they've already done, is that there's going to be a lot of pressure on future revenue growth for these banks, just because as rates come down, they're not going to be able to lower their deposit rates as much as the longer term rates have come down. So margins are going to be pressured. So I think what JP Morgan is trying to say to the market is, look, our revenue growth from this part of the business is not going to be as great as you might have expected from what we've seen in the past, but we'll be able to make up that revenue growth from other areas of our business, whether it's investment banking or whether it's their wealth management business, so that they'll be able to offset it as much as they can. But there are concerns in the future on what net interest income can produce for the banks.
So Tyler, let's look closer at the investment banking income as well. Who do you think will be the winners and losers in the coming weeks?
Well, it's interesting because you brought up Citigroup. I think, they have some pretty strong momentum behind them, but we do have some regulatory concerns for that bank all of a sudden. Some potential caps on growth, and then a recent letter from Elizabeth Warren about the banks, about that bank specifically. So what I would say is I think JP Morgan actually comes out the winner. I think if we look over a longer term horizon, I think Morgan Stanley, they've been able to take share in the past, and they certainly have a good platform for different types of strategies for the investment bank. So I think going forward, I think you see JP Morgan and Morgan Stanley as the big winners.
As well, you did flag commercial real estate as one of the big concerns coming forward. What is the risk involved there?
Yeah, look, we don't think we've found a bottom in commercial real estate yet. And so what that means is numbers for the valuations of these properties need to continue coming down. We've seen some sales. I think those are one-off items. Here in Minneapolis, where we're based, we saw one building sell for a 91% discount. I think that's out of the norm, but I do think the numbers for these buildings still need to come down. And we saw an issue with New York Community Bank earlier this year with some multifamily commercial real estate issues. So I think that continues. And so when we're looking at the broader regional banks, I think there are some concerns going forward with how much commercial real estate exposure they have. So if you want to invest in regional banks, I think you want to stay in the super regionals, or you want to stay in the money center banks like the JP Morgans, the Goldman Sachs, the Morgan Stanleys.
So Tyler, let's take a closer look at JP Morgan as well, due on Friday. America's biggest bank, priced in around 12 times earnings, below peers and the market. So what does that tell you?
Well, look, banks are always going to be priced below the market on a valuation basis. So what we have to do is we have to look at what their relative valuation is to itself over history and versus peers. And as you mentioned, the valuation is a little bit lower than peers currently, but JP Morgan is also trading at what I would call it near a 10-year high, whether it's the PE, tangible book value. So I think JP Morgan is getting a little bit pricey. Maybe it does have some room to run because it is the leading bank for the US, right? So maybe that valuation can continue to move a little bit higher. But if we start looking at the overall growth of book value or tangible book value or earnings for JP Morgan, you're starting to see that crest over a little bit. So I do think valuation is probably a limiting factor here. Not to say that we don't own it, because we certainly do, because it is a fantastic bank to hold for a long term. But if you're looking at it on a near-term basis, it's probably one that may be a little bit stretched on valuation.
And finally, just Tyler as well, CEO Jamie Dimon from JPMorgan, his team spent a lot of time thinking about what happens when he does eventually leave the bank. Is there shareholder risk given Dimon's outsized profile when compared to other banks?
Absolutely. As much as this company can try to insulate from Jamie Dimon leaving, I do think because of his influence that he has, the nature of his job, and just the person that he is, I think it is going to be a challenging thing for the bank to overcome going forward. Not to say that they can't get someone in that seat that can fill his shoes, but it's a tough task. And so I think there is some shareholder risk when he does decide to step down.
Tyler Ellegard at Gradient Investments. Thank you very much for your thoughts. And that's your look at US banking stocks. I'm Peter Devlin, and this is Reuters.